Hello and welcome to FXStreet Currency in Play. I'm Matt Brown. I'm joined by Marc Ostwald. How are you today, Marc?
I'm very well.
Well, thank you very much for coming in from ADM. Let's look at the top trends. Euro move yesterday after the ECB and Draghi. Sharp move towards 125. We'll be nearing the ECB's pain threshold. So just quickly talk about that. And
yeah, I mean, I think that there is an element of pain threshold. It is about how the drop in import prices would make the task of getting back to 2% that much more difficult. I think the interesting thing is really it's today that we've got a proper justification for the move, with the ECB floating some ideas about how it might taper.
And this was via Reuters.
This is via Reuters, suggesting that the taper could be as aggressive as, say, 20 billion, down to 20 billion from 60.
Incredible.
And for just 6 months. The other options are to make it 40 billion or to extend for 9 months. So, and on that, to some extent, we'll trade. The up move that we saw during the ECB Council meeting yesterday actually had a whole load more to do with the jump we saw in initial claims, which was always going to happen, but it was much bigger than people were expecting, even though the forecast, 298,000, that's a seismic change from what we've been seeing, but it's not a trend change.
And gold is moving up as well. We're looking at 13-month highs now. Do you see that continuing?
I think to a certain extent I see it continuing. I think there are a lot of people out there, and you can see it with the demand that you've got for T-bills everywhere, that people are fearing that we are going to have some sort of accident at some point in financial markets, even though actually what's been happening for the last 5 years keeps on saying, well, every time we have a slight correction or a larger correction, all it's been is a buy the dip, the opportunity. So, but a lot of that move in gold, one has to say, we've only just got to the highs for the year in gold when you price it in yen. So very sharp contrast there, and I'm sure the same story, I haven't looked at it in euros, but I'm sure you'd find the same sort of story in euros. So it is a lot of it due to that dollar weakness.
And speaking of yen, we're looking at looking at the Yuan, in fact. That's an important currency. You've brought along a couple of slides today that we can have a look at, and looking at the Chinese Renminbi as well. Just talk about where this is going and what's going on.
I think it's interesting because this was one of the moves which no one had on board at the start of the year. The talk was the Yuan would get to 710, 715, and it was basically going down forever. And the Chinese authorities were pursuing an active policy of Yuan devaluation. Well, it didn't actually materialize. In fact, since the beginning of the year, it's done nothing but appreciate, as they've reined in some of the outflows, particularly the speculative ones, going towards investment in the entertainment sector and indeed in foreign property. So that's helped to rein that in, and obviously they are benefiting from the fact that you're actually seeing some inflows at the moment. However, there is a very stark contrast, because this is only against the dollar.
Let's have a look against the euro.
And what the euro chart tells us very emphatically is that last chart was far more about dollar weakness, which will inevitably suit the Chinese authorities, given that President Trump is in the White House and he's been leaning all over China in trade terms and implying that they're manipulating their currency. So for the Chinese yuan to appreciate against the dollar is a good thing. Meanwhile, it's becoming more and more competitive against the euro. Yes. However, that also tells me another thing, that actually the boom in euro exports that we've seen in the past 18 months after a lull of 2 to 3 years has certainly not been impeded by a strengthening euro against the yuan, which is an important thing to remember, because we keep on talking every time any currency appreciates, oh, it's going to be bad for their export sector, and you suddenly find, in the equity indices of another country, all the stocks being sold off because they're mainly exporters. Well, there you go. It's not necessarily the truth, that, is it?
Take a look at those currency pairs there, and just briefly, calendar for today. Anything jumping out there? Canadian unemployment rate.
Canadian unemployment rate is important. It's expected to sort of flatten out after very strong gains. We've come from 6.9 to 6.3 in about 6 months. It is expected to sort of stay at 6.3 today. I don't think today's data, even if it is stronger than expected, has any implications for Bank of Canada policy after that surprise move.
Right, yeah,
They've been preemptive. It may indeed come in stronger than expected because they probably would have had sight of this data. So that's worth bearing in mind. The market's not discounting anything in terms of further rate hikes this year, but they are expecting another move in Q1, and I think that's probably correct. Mr. Harker's going to be interesting. He is one who leans towards the hawkish side, so it'll be interesting to see whether he comes down on the side of Mr. Dudley yesterday, who was sticking to the line, you know, we're still going to hike rates one more time this year, and we're not particularly worried about the fall in inflation, or whether he sides with Mrs. Brainard and says, I think this is, you know, a reason to rethink our rate trajectory. Now I see NISR GDP estimate in the UK is going to be a point of interest. We've had the trade data today, which actually were revised better for Q2.
Yep.
So there might, and we've had better manufacturing data. So we might actually see a slight uptick in that, which again, you know, we've had quite a negative market view on the outlook for the UK economy. Perhaps the risk now is we've come to this assumption that UK rates aren't going to go up till 2019, according to some surveys, and we may need to readjust that and bring it slightly forward.
Okay, on that note, Mark, thank you very much for joining us today on FXstreet Currency in Play.